Okay guys, so yesterday I had a kind gent mention on my YouTube channel that he would like to learn a little bit more about higher timeframe confluence and lower timeframe entry, so basically using multiple timeframes in order to get involved in the market. Now, ever since I started trading, I kind of had the mathematical formula in my head where I thought, well, on a higher time frame, you're looking at a larger range of pips. On the daily, for example, on the Euro USD or Pound US dollar, you might be looking at something around about the period of about 100 pips, or the range of about 100 pips. Whereas on the 1 minute, you might be looking at a range of maybe 3 pips at a push. Now, what if I could enter into the market on the daily sort of confluence? If price reaches a daily area where I think that price might reverse from or might react from, what if I then zoom in to the 1 minute or to the 5 minute or 10 minute or whatever and try and get my entry on from there? So what I'm going to do here is I'm going to show you a bit of a mathematical formula behind this, along with like a few drawings and bits and pieces to try and make it make sense. Then we're going to jump into the charts where I'm just going to show you a quick demonstration, and then I'm going to show you 3 trades. 1 I took and 2 I missed because I placed my entry in the wrong just in the wrong place by 0.2 pips I think last night, and I missed out on a trade which looks like it's going to end up being a 40 to 1 and the other one being about 20 to 1. So I'm just going to show you how, or the reasons why as well, that looking at a higher time frame makes sense. And then you set an alert basically as price approaches that area, so you can be at your desk to try and get a lower time frame entry. Now, first of all, let's just jump straight into the explanation bit. Okay, so on here we're just making this up, so we're just using made up figures. Okay, so we're going to pretend that we're looking at a weekly time frame, and you might have 400 pips. All right, so the range which we're going to be looking at is 400 pips, and this, wherever it is, there it is. This is the price movement during that time period. Okay, so the price movement during that time period goes like this. So we're looking at a downward market, price is coming down, it's hit a low, and it's slowly worked its way back up, and obviously our point of entry is going to be somewhere up here, okay, just for the example. Alright, so the price movement is going like that, and the whole range is 400 pips, or our target is going to be 400. So looking at this, I have made it that we've got, I've put it down as daily, but pretend it says weekly, but our stop loss is going to be, just to keep the numbers nice and round, 100 pip stop loss and a 300 pip target. So a 1 to 3, good ratio. For a lot of strategies, 1 to 3 is really good. If you're getting a 50% win rate, you're going to be growing your account without a doubt. So let's just say that the stop loss is 100 pips, the target is 300 pips, it's 1 to 3. Now, that's good. You could always set a pending order around here. If you know you're not going to be at your desk, but you think it's going to be a key reversal area or a continuation area or whatever, and you want to get involved in the trade, you get triggered as soon as price comes into here. You hope that it doesn't go beyond your stop loss and take you out, and it continues down and hits your take profit. Super if you've just bagged a 1 to 3. Brilliant. But what if you do set an alert as price approaches it? So your alert comes in sort of maybe 20 pips before, so you know you've got potentially around about an hour or so to get to your chart, so you're not in too much of a rush. But what if you manage to get there and find the same reversal pattern what you're looking for on the higher time frame, but you manage to find it on, say, the 5 minute or the 1 minute or the 3 minute? So if you look up the top left, looking at my my range criteria which I look at, I don't really use the monthly or the weekly anymore. I love the daily, I love the 4 hour. And I look for my confluences on these two, so daily and 4 hour, and I work my way down to try and get an order block using one of these. Typically an order block, the lowest I'll go for an order block is 5 minutes, and then I'll try and zoom in on that order block and try and get a 1 minute entry, and I'll be showing you this on the charts in a second. Okay, so let's say, for example, we're going with this sort of strategy here. We're looking on the the weekly originally, and our target is, or price is just about to approach. So what do? We try to aim for a 5 pip stop loss and a 395 pip target. Okay, now what does that do to our risk reward ratio? Well, we had a 1 to 3 here. See the 3 showing up right there. Let's move this out of the way because it's interfering a bit. So we've got a 1 to 3. Well, if we do manage to get an entry on a 5 pip stop loss, still 5 pips is quite large for me these days. I tried to go for between 1 and 3, but say we're going for a 5 pip, our target is still the same. Now I'm going to show you some basic market structure again, just on the 4 hour, and then we're going to look at a couple of the trades, but our target is always going to be the same because we're expecting price to reverse and react from here and go down to the original target. Now if the target was on the weekly or the daily or whatever, it doesn't matter, the target is going to be the same. So we can keep our target in the same place, but the difference is that it's just added another 95 pips in this example to our target. You know, all what we've done is reduced our stop loss. So what we can see over here is price works its way down, and this was our entry point. Okay, we've allowed the market to go, you know, 95, 96 pips against us, and then continue down, and like, whew, okay, it worked. You know, we've gone off, we've hit our profit. You know, fantastic. But what if you can zoom it in over here? So price comes down, we get a beautiful little entry off of here. Well, what's our target become? Our target's become 79. Okay, so our risk reward ratio, sorry, is 79. If you're risking 1% on your account, with this you're going to make 3%. With this one you're going to make 79%. Why? Because you've got a much bigger target with a much smaller stop loss. Now that's the importance, or the, you know, the reasons behind looking at higher time frame for your confluence, understanding how the market moves on the higher time frame, and then dropping it down to a lower time frame when price approaches that area. So you're looking for the same sort of entry criteria, but just with a much smaller time frame. So was there anything else that I drew on here? I don't think that there was. Okay, I can get rid of that now. So what we'll do is we'll look at the market. Oh no, okay, yeah. So I did create something else. Let's see if I can move this a little bit closer for us. Zoomed in even further. So from there, this is just like a zoomed in example, you would look for the entry criteria. So just imagine we're looking at the apex of this move over here. So on a zoomed in level, so we're looking at it on the 1 minute, we're now looking to try and get an entry here, okay? Price comes up, price moves down, we've got a lower low, we've got an entry possibility there, we've got another lower low created, so we've got another possible entry, you know, somewhere around here if I could identify an order block, and we could be running with 2 trades if we wanted to. But the principle is this: you're zooming in on a lower time frame in a key area where you're expecting price to be turning around in your favor. Okay, so that's why you're zooming in. You're going from a larger time frame confluence, so daily, 4 hour, 1 hour, and your targets are based on those time frames. So if you're using the daily for your confluence, your targets are going to be the same as the daily. Okay, that might be your end target, might be the same for the daily, but your target is always going to be for the daily. Okay, the same with, you know, if you're looking at a 15-minute order block, okay, your target is the same as if you were to take the trade on the 15. You know, it's as simple as that. But you take your entry on the 1 minute if you can. Now we're just going to look at the charts real briefly. Let's zoom in to the, let's go to the 1 hour and we'll look at some real charting, and I'll talk you through a couple of trades that I took. One that I definitely did take, and 2 which I missed out on, which is quite frustrating. So I'm just going to first of all mark up a bit of market structure for you. So we're going to go on the 4 hour and we're just going to look at some market structure. Okay, so I'm going to start off at this point, so we're going to work our way backwards. Okay, so I'm just going to point out previous low was there, the low was definitely broken. We're now looking at the highest point between those 2 levels, so this is the high, and then we're basically working our way down in the market, and we have found a low. Okay, so we've got a low, working our way back. What do we get? We get a little miniature break of structure over here, where we've got another low created. We've got a little bit of a counter trend move. So all I'm doing at the moment is I'm just marking up on the charts the possibility of the direction of the market. Then we get a key break of structure over here. Oop. So the key break of structure is right there. So that's indicating to me, even though it's a wick break, there's a possibility that price might be working its way back to another area along here. Okay, price has already breached this part. So we know that a typical market structure, you know, market goes like this. You have an impulse, a correction, impulse, correction, impulse, correction, impulse, correction, and the price just basically carries on doing that until it turns around and does it the other way. Now with this, what we've got is a large impulse down overall. If you were to zoom out a few time frames again, this would just look like one large impulse down. Then we've got a bit of a pullback, then we've got price moving back down, and I'm expecting price to come back a little bit higher, and then maybe, you know, create a higher low, come back a bit higher, maybe to these sorts of areas here, before continuing its journey down on another large impulse. Okay, so that's what I would expect the market to do. It doesn't necessarily mean that it's going to happen, but it's just me creating the story of the market in my mind, so I know what I'm looking for and how I can be getting involved in the market. So what do we get? We've now got this new sort of put that in the wrong place. We've got a new kind of structural high to an extent, not the overall structural high, but like a miniature high, which gets breached by this one. We don't get the low broken at any of these points. The low has stayed in its place. So the low is down here. Let's mark on here the low. Let's call this a structural high and bring it all the way across. So we've got a break of structure here. We've got a new break of structure here. And then what do we get? We get another break of structure. Ooh. There. Okay, so they're only fractional breaks. They're only breaking by a couple of pips each time. Even though we're looking at the 4 hour, you can see clearly this is only going to be a couple of pips. But the general trend of the market is continuing from the low over here and breaking the structure. The price is returning back up a little bit, okay? And that's probably part of the sustained, very slow build up back up to a certain point where it's probably going to reach an order block over here and continue its way down again. Okay, so that's why I'm building that kind of picture in my mind. So what do we get over here? Okay, we've got the perfect sort of, I call it like the Y entry. So again, this might be mentioned in the previous order block video, but we've got an impulse up, we've got a pull down, we've got another break up, and then we get a break of this low, and then a confirmation that that low is the low, and then we've got a lower low and a lower low. So our next entry, if we want to be relatively safe with it, is going to be somewhere along an order block here. Okay, so you look to get involved there to continue the market down to the lows of this move, and preferably, if you can, from here to create a new low. And the reason for that, the reason why I'm a little bit confident that the price is going to come down and break this low, is that we didn't break this high. So we've got quite a weak low over here. Okay, so the low is looking like it's probably going to break. So I'm expecting price to work its way down to here, create a new low, and we start doing this sort of jiggling around again. And it's just a cyclical pattern. It just happens over and over and over again. And it happens on the higher time frames and the lower time frames, which is why my entry criteria for the higher time frames and lower time frames are only very slightly different. I'll explain that in a second. So what do we have here? Let's just mark it out on the charts really easily. Alright, so we've got a little bit of a pullback there and a break. We've got another one here, fractional. But what do we then get? We get a break of a low, we've got a new low, we've taken out this structure here as well, so I call that a break of structure. And it looks like we're going back into the downtrend, as you can clearly see. Okay, so this is me basically building the story on the 4 hour. And what do I want to do? For me to be able to get a decent entry, I don't want to be taking trades where the stop loss is like, for example, over here, you know, set my stop loss above the nearest high, get involved in the market, you know, it's a 25.6 stop or 24.6 stop. That's massive. You know, these days, you know, I'm looking for between sort of 1 and 3 pips. So I don't want to be taking a trade which is 24.6. So what do? You look for an entry criteria on a lower level. Now, with all of that explained, you can surely at this point understand that, you know, the stop loss being that high is just too high. And I'm looking for entry criteria off of order blocks. So I'm looking to the left, you know, I'm looking at order blocks, I'm looking at supply areas, I'm looking at demand areas. So let's just mark this on here as we're on H4, so H4 supply. You know, this is a possible area when price returns to it at some point, which it might. So I'd be looking to be getting involved there on a lower time frame. Now I'm going to try and talk through the process which I had in my mind on the, I think it was the 24th, it was only a few days ago. So we're going to drop down, or we're going to zoom in for chart anyway, and I'm going to try and find areas on here. Okay, so this is where I was talking before about you work your way down from the highest level down to a lower level. So, you know, you can start off on a daily. What's the daily look like? Not much information on there. 4 hour, can I find an obvious order block? Now, by the way, what I'm going to do is on a 4 hour, I'm going to mark out the new sets of structure, okay? So we've got a break at this low here, which means that this becomes our high, okay? So as long as price doesn't break above here, this low still stands, okay? Now, what do we get? We get another break at a low before we get a break at a high, which makes this one, where the little red arrow is, that becomes the high. Okay, so that's the new high to break. Then what do we get? We get another break at this low. Okay, a break at a low, which means that the high has moved to here. So these are the key areas, and I'm always looking at the last candle. Pretty much the last candle or the last push up before price reverses its way back down. Because, as you see on the Euro-USD, especially on the 4 hour, price comes in quite deep. It is a lot of the time coming in towards this last push up candle, well, to include this one. Yep, just about touched it. This one, coming back. But what do we also do? We look left on the charts. We look to see what there might be around here. Okay, so in this area, we've got a lot of potential liquidity. Okay, there was a lot of buying pressure in here where you can see the larger wicks being pushed up. So price had worked its way down, and then price gets pushed up, and then we're breaking newer highs up here. So there's going to be a lot of orders down here where people are going to be taking profits. They're going to be looking to get long in the market again, because the typical range traders, they're expecting price to bounce off there, and they can get involved and then bounce off and then get involved, bounce off, get involved, and take their trades like that. Well, we know that there's going to be a lot going on, but also we're going to be looking at potential areas for order blocks down here. So what do? We basically look on the charts. Let's drop down, because on the 4 hour, the next sort of area on the 4 hour which I'm interested in is this area here. Okay, so this little grey candle down, because that's the last push down before there's pushes up. Okay, now if I zoom into the 1 hour time frame now, I can look left to try and identify targets. Now, I don't want to go too far back. I want to go to the 24th, which is where the demonstration came in. So let's just mark on the bar replay tool where I got involved. I think it's around there. So looking at targets, or potential targets, I like to mark up where the lows are. Okay, so we've got the low here. That's the new low to reach as a target. And then beyond that target, where do I want to place my potential trades? Let's look at this. Okay, almost exact. So where I was saying that there's likely going to be liquidity, there's also a potential order block. And the reason why this is an order block, in my eyes anyway, well, this whole sort of push down is, but I tried to zoom into the closest one, is that this is the last push down before the move which broke the most recent high. Okay, so in this area, the high was over there, it got broken, it's this one. And before price came down to tap below this, we ended up breaking that high over here. Okay, so this is the order block which I want to get involved in, and if price broke through here, I'd be looking at the lows of this, and I'd be looking at this potential order block down here. Okay, so the initial target is this area. With that out the way, and also understanding that there's likely liquidity under this area, we can start plotting on the chart. There, like that. Now, when I was looking at this, there was a nice looking sort of this candle here. Okay, there were two candles. There was this candle. Okay, so I need to try and explain this from an order block perspective. The price has been swinging its way down, so we got a nice break here, we got a push up, we got another break here, we got a push up. Now, what did we get on this push up? On this push down? We didn't, like, if you look at it properly, we didn't get one clean swoop. You know, it was mostly the black candles for sure, but halfway up, what did we get? I'm just going to draw it over here. We had to move down to here, where price had a little bit of a counter move, and then it continued down. Okay, so within here we can identify possible order blocks. Now there's a perfect looking downward candle here where you've got a large wick rejection. Okay, so the wick rejections usually mean that there's been a little bit of liquidity going into the market and it's just pushing it down. So this looks like a nice supply area, additional supply coming into the market. You had a massive doji candle here, which means that price tried to push down, it tried to push up even higher, but you know, the sellers were clearly saying no, the market's still overpriced, we need to drive the price down. So you know, that's where the wick formed, and then we got a break at the low. So this is a key area for me to at least look at. Does it mean that price is basically going to stop here and reverse? No, it doesn't. But it is an area, due to my backtesting and due to my trading over the last couple of years, where I know there is a higher probability of picking this area than, say, this candle, for example, or this candle, or that candle. I know to look for this area. Okay, so this is my point of interest on a higher time frame, on the 1 hour. Now what I found was that on the 1 hour, that looks a little bit too big for me. Okay, my my entry criteria, I want to try and keep it below 3 pips if I can. 5 pips maximum, really. Now this is a range which is a 15 pip range, even if I got an entry on the halfway point, and as you can see, price came up. But even if I got an entry on the halfway point, we're still looking at about 7.5 pips, 8 pips, there we go, 7.5, 8 pips. And the target, as we explained before, is the nearest low, okay, on the higher time frame. So again, looking at the 1 hour, the target is down here because we're expecting the price to do exactly this, price to come down, up a little bit, and then back down, break the lows, come back, break down again, okay? So really simple as that. But what we'll do is we will zoom in again, sorry, we'll go back. But yeah, so to explain, I wanted to try and find a cleaner entry into this than a 1 hour time block, okay? So we drop down to the 30-minute, okay? And what do we get with the 30-minute? The same. It's still the same push up. It's a large aggressive candle. Can I get involved closer? So we drop down to the 15. There we go, that's more like it. I've managed to almost halve it, okay? So the new range of this area is about 11 pips, okay? That's better. If I get a 50% entry, that's going to be about 5.5 pips, which means I want to go even closer. What do we get now? Oh, we get even better, okay? We've got 2 candles here for a push up, so I want to try and get that candle. Why is this candle so significant? Because it's clearly a push up. Also, because we're on the lower time frame, I can see, and it becomes a little bit more obvious, that we had a little mini break of this high. So this high was broken, not by this candle, but by this candle, which means that this sole candle is the one which I want to be getting involved in. Can I drop it down to a lower time frame? Okay, here we go. We do have a push down, but I might be able to refine it to a 3-minute. Okay, so we dropped it from originally, what, 11.5 pips, something like that, down to a potential 7.5. So if I get an entry on the equilibrium, which is the halfway point, that's going to be 3.7, 3.8 pips. Better, closer. 1 minute, okay? So what's the 1 minute time frame telling us? Perfect. Even more perfect. So we can change this and we can move our point of interest to this candle, okay? It's not this candle because this one, the darker candle, that began the push down, okay? I wanted to see the impulse up. Now, if we look left again and we can see that this level was broken, yeah, on the 3 minutes, it looked like this whole range. But what we've done is we've just refined it to the clear breaking candle, the push up before the move failed. Okay, so we've managed to refine it to this area. Now, what is this in terms of pips? Okay, so in terms of pips, we can go from the high here down to the low here. 4.7, perfect. Can I get involved on the equilibrium? I hope that we can. Well, we did. Spoiler. So what do? I mark up on my charts really quickly my adjusted Fibonacci retracement tool, where I've got the equilibrium marked on there. On lower time frame entries like the 1 minute, I typically get involved on the 25%, but on higher time frames, say 15 minutes and above, I do the 50% because I want to try to give it a little bit more of an opportunity to just to get tagged. But we're going to zoom out here and we're just going to speed up the chart. We're going to put our risk reward ratio on there as well. So let's get that on there, get the risk reward ratio tool on. But first of all, we're also going to identify where our targets are. Okay, so we're going to go back out to the 1 hour time frame because that's what we were looking at when we identified the order block. Okay, and we're going to place our order on there. So our target is all the way down here. So the target is down here, and at the moment our trade, let's zoom in again to the 1 minute, to try and drag this across slowly but surely. Hopefully we'll see a nice clean entry. It's about there somewhere. Let's zoom in and see how price approaches it. there, we get a tiny tag. Okay, so with this we get tagged into the move, which is superb, but I want to make sure that I'm getting my entry criteria correct. So what I'm going to do is I'm just going to slide this out the way just to clear the charts a little bit. Now, what we've had is a very minor break right there, and we've had a very minor break here. So it looks as though price might be working its way down again, okay? But we're involved in a trade, which is superb, so we're just going to wait for a little bit. Prices come up, definitely confirm that we're involved, okay? With this in mind, we've got the price coming down, you know, we've broken the lows here, we've broken those lows, superb, but what we've got now is another high break. We're still involved in this trade. Based on our 1 hour analysis, we're expecting price not to go any higher than this. You know, it might do, you know, and if we do, we're going to be out. You know, no problem, that's fine, there's plenty more opportunity out there. But I'm pretty certain at this stage that price is going to continue down. Even though I've gone into the red a little bit, I'm almost halfway into my risk level. But I'm expecting price to continue down, because quite often what happens, especially when you've got a bit of a ranging market like this, is you get what's called, I think it's called anyway, the whipsaw. So let's say that you've got a ranging market like this, you'll quite often have a move which looks like the price is going to break out. So I find this a lot with the London breakout session. So price looks like price is going to break out of this range here. Then it comes up and people who were going short, they cut their trade and they start reversing it and think, oh blimey, okay, we're breaking out up here. So they reverse it and they get long again, so that creates liquidity in the market, or it covers the liquidity over here, and then the banks go, nah, we were joking, we're actually going south in the first place. Okay, so quite often a whipsaw is created. You get a nice move down, a big move up, and then the big move starts. Okay, and that's where a lot of people get caught out. So I was still quite confident, you know, a little bit less confident, but I was still confident that I was going to get some sort of entry here. Okay, we got a nice move down, we got a break of these lows, and we only got a wick break of this high here. So with that in mind, I'm in this trade now. You know, my target is 18.25 away. Okay, so it's let's see if I can make that a little bit more visible for you. Let's try and get a better text color. Yeah, there we go. So 18.25 risk reward ratio if this wins. And then what do we get? We get a strong move down, and I thought, you know what? I want to get involved in this again if it comes back up, but I am going to get a real greedy move on, and I'm going to see what happens. I'm pretty certain that if price comes down below here and I bag any profit, I'm going to be getting involved in this. This is showing to me there is a lot of order flow coming down. Look at the size of this candle compared to the others. You know, the one's going up. You know, that's a decent sized candle, that's a decent sized candle, so is that, so is this, so is that. But in reality, this is massive. Okay, this is proving to me that there are larger orders coming into the market. Order flow is now going south. I want to get involved in the last push up, and I'm only looking at the 1 minute at this stage. Okay, so what did I do? I basically looked at my last push up, which was, I think it was this, yeah, it's this candle here. Sorry, confusing myself because I was thinking really quite fast at this stage, but it was this candle here and obviously this black candle. So this area was my point of interest. Sorry, let's try and mark this on the chart in a different color to make it a little bit clearer. So the point of interest was this candle. Let's move that over so just so you can see the wicks. Now what I do, risk reward ratio to 1, but I know that if it's a 1 minute entry, I need to try and get the 25%, not the 50%. The equilibrium is only ideal, really, what I find anyway, for 15 minutes and above for order blocks with that. But with order blocks on the 1 minute, I try to get involved on the 25%. So my trade went on right here, which was basically the base of that black candle. Okay, so a new trade comes on, and what happens to my stop loss? Okay, the stop loss here was, what was it? 2.4 pips, 2.4, 2.5. The stop loss on this one is 1.4. Okay, it's not quite half what this one was, but hey, it's better. All right. So we're going to have this in mind, and we're looking to drop the market. We're looking to drop it at least to here to take, a 25% if we can. So if we bag 25% off our trade here, we're going to be getting at least a 1-to-1 return if price comes back in against us, and that should cover us with the losses of this one and this one at break even. Okay, so if I'm risking 1% here, I'm risking 1% here, but I bag 1% there, it should be covering my losses. There's 1% profit on this, minus 1% loss on this. Nah. Things happen. But let's see how price goes. It doesn't quite break this low, and I don't want it to at this stage. I want it to come back up and tap this before shooting off. Because if it does break that, it's probably not going to come back to this one. So what do I get? A couple of moves where it just clearly taps me in. Now if I did go for the 50% on the 1 minute, I'd have missed that entry there. Would my spreads have taken me in? No, I doubt it. There's still, 0.1, 0.2. Yeah, 0.1 pip. I probably wouldn't have got in because you still need to get the buy to come up to this level, okay? So what happens after this? I'm just going to press this and you'll be able to see. New low created. We bagged the 1% so far with that smaller trade or the smaller stop loss. But let's just mark on here where the target is because it's all the way down here with same as the other one. This looks insane, but it's realistic. So our target is 43 pips away, and our stop loss is 1.4 pips. So that's a 30, call it 31 to round up, a 31% trade. This is a 18% trade. Okay, so there's that in mind. What happens with price? Keeps going down. So as we allow price to continue, you can clearly see that the trade is moving into profit, it's coming back, it's doing its typical thing, but I'm confident just due to the higher time frame, looking back on the 15 minute, okay, 15 minutes, it was a 1 hour order block. I'm confident that this is going to hold and we're going to create newer, fairly confident that we're going to create newer lows based on the pattern of the market where it's been continuing for the last couple of months at least. Okay, so we're going to work our way down. We're going to go to, in a second, a couple of trades which I missed last night by a fraction. And you'll see why I got a little bit agitated with myself. But I was updating the Discord with the guys who I'm teaching at the moment, talking through my process, and they could see as well that I missed this trade by 0.1 or 0.2 pips. And waking up this morning to realise that I could have bagged an epic trade or two epic trades. It's a little bit frustrating, but you can see that the market has massive potential every single day, so I don't really care that much, but it would be nice to see 40% on the account. So we're gonna work our way over to that, and I'm gonna figure out whereabouts it was again. Okay, it's a little bit further because I've got the dates wrong. So what happens here? So this one was a perfect profit, okay? These moves, perfect profits. Okay, let's drag these across. Good day. 31% almost, call it 30.5%. And that one 18%. So right there, there's almost 50% of trades. Perfect. Just based off of an order block which we spotted on the 1 hour, okay, which was this candle here. And we managed to refine it and move it in, move it in, move it in, and get 2 trades off it. We got a nice entry trade and we got a confirmation trade. Superb. Okay, so I'm going to drag the day along to this evening when I got on my computer at about 3 in the morning because my sleeping pattern is ridiculous. And we got to around here, okay, and what did I spot? So looking left on the charts, I knew again what we had is we had a new low over here, so the price had come down, we'd created a new low. Get rid of this now. What do we have? We have a new high, which was actually the point which we'd got involved in the trade, which is superb, good to know. We got it right at the high, which was over there. So all what we do is we look on the chart to see where the order blocks are, and I like to spot, especially when we're using like a 15-minute time frame or something like this, around about the 50% mark of a leg. Okay, so we've got a leg coming down, I want to see price come back, and anything around about the 50%, 60, 70% are the points for reversal, which I can see largely at the points where it turns around at. Okay, so I'm looking for price to go somewhere around here. Okay, so looking left on the chart, what can we see? We can see a potential order block here. So just to draw that out to make it a little bit more sense, similar to the last one, okay, really similar to the last one, instead of the leg just being a nice straight move down, we've got a move down here which kind of goes like this, like that, and then down again. Okay, we've got like a little lip. I don't know really what to call it, just a little bit of a minor pullback before we go down. Okay, but we do go counter trend ever so slightly. So on here, I'm quite conscious that this candle is the move because it's got a high wick. It's almost taken out liquidity of this area. I'm conscious that there's probably liquidity between these sort of candles here, but this is the one which is getting my hopes up a little bit. Okay, so over here, I know that something might happen. As you can see, it does. So with this in mind, again, I think at this stage I tried to zoom in. Let's just make that a little bit bigger. To this candle. So we've got our order block placed on the 15-minute candle. Okay, let's move that across just so it makes it a little bit more clear. So first of all, what do? I'll just try to mark up where we're going to be getting involved. Now, I want to bring this back a little bit. Now, as price is approaching, and I'm stupidly on the charts from literally about, I don't know, 1:30 in the morning through till about 3 or 4. Just bad sleeping pattern at the moment. I need to snap out of it. But this is the area which we're looking at, okay? So as price is approaching, I'm kind of watching my charts from about here, just watching on the 1 minute, okay? So we're gonna look at this on the way through. And as we know, I'm gonna be looking for the standard reversal pattern, which is that, okay? Gonna be looking to get involved here and here, okay? Really, really simple. Now, what happens on the 1 minute? Let's zoom in. As price approached here, I could have been involved already on the quarter position, okay? On the quarter, but I was waiting for it to come up to the halfway point, okay? Frustrated with myself that I didn't take it, but you know, that's life, okay? So I missed it. I missed a possible entry criteria or an entry possibility, but the reason for that was the size of the stop loss, okay? So potentially I'd be looking at something like 7 pips, 6.9 pips, and I wasn't really willing to do that. So looking at this, it was a little bit better, 4.5, still it was quite large. So I obviously didn't get tagged in here on the 50%, and I also didn't take the trade on the 25%. So what do? We just had to wait until price was going to show its hand a little bit better. And price came in a little bit higher, and I thought, okay, we're going to be getting in some action here. So let's move this across. Price came up. We came within. It says 0.3 on here, but I think I'm using Oanda, no, FXCM. But my other broker feed was saying that it's like 0.1, 0.2, and then what happens? Price starts pulling away, and I'm thinking, oh no way, man, I've missed my opportunity. You know, what do we have here? Let's mark up on the charts really, really briefly exactly what I did last night, okay? So let's just move this out of the way, tidy up the charts a tiny bit. I just wanted to confirm to myself that we had a couple of breaks of structure and that price was actually looking to reverse, okay? So I allowed price to come down before I started marking it up correctly, but here we go. So we had our little break here. We had a break there. Simple as that. Then I had this area here to confirm. Definitely confirm that we got a broken structure. Okay, so would this be classed as broken structure? I think so in my books. There we go, we get it, even though it's a wick break. Then we get a body break. And I'm thinking at this stage, you know what, I've missed out on, you know, a fraction of a pip. I was getting frustrated. I was typing into the Discord chat for everyone to see. You know, not really frustrated, but just sort of like, no, I kind of, to an extent, wanted to show off to these guys and say, this is how to do it. But I didn't manage to do it myself. So what did I do? Looking at this, I was like, right, okay, if price comes back in, I'm going to get a very close entry. Okay, we've clearly got a point here. If price comes back up to here, it's in the larger order block, you know, we're in a 15-minute order block. And I want to try and get a 1-minute order block entry, okay? So this is again where I shot myself in the foot, so a bit of a spoiler, but I want to get the last push up, okay? So the last push up is these two candles, okay? This one and this one. Not just this one by itself, but this one. I wanted to be safe. I wanted to be in this trade because I knew price was definitely starting to work its way down. Again, where I mentioned about order flow before, here we go, order flow, down, down, a push up, down again. You know, it's like, it's clearly price is looking to reject from here. So if I get tagged in, it's a miracle. You know, I was thinking, do I actually just get involved just on the bridge of this and do like a 2 pip stop? But no, I wanted to be greedy, which is not a good thing in the markets, okay? So let's mark on here where I'd be getting involved on the 50%. No, actually on this one, this is where I got annoyed with myself, okay? So remembering this correctly, I tried to get involved on the 25%, okay? So as soon as price went down here, I thought, right, the trade's going on, I'm getting involved on the 25%, which would be here. Stop loss would go there, 1.3, I remember this now, okay? So the 25% is here, but I knew that there's a nice little order block there. Yes, liquidity's just been swept, so the ideal range is up here, but I wanted to get involved on the 25%. Now, for some reason, and I don't know why, but I didn't check my broker feed before I took the trade, okay? So I placed a pending order, and my stop loss ended up going to 9.5, I think. So I went within literally 1 pipette, you know, 0.1 of a pip. That gap, okay? So that was the difference, and you're going to see now, okay? I was hoping that price was going to come back up and tag me in. It shows on here it tagged me in, but it didn't. So it was like my stop was there, okay? But on the actual broker feed, this did not tag me. And look at that, it is like picture perfect. You know, if I set the order correctly, which is there, I definitely would have been in by, you know, 0.1 of a pip. So where was the target by this for this, by the way? So just to work this out for you, and just to show you, the target is all the way down here to create a new low. You know, we're basing it on the 15-minute, that's a 4-hour, but we're basing it on the 15-minute. The first target, you know, so the first target overnight where I would be taking 25% off the trade would be here, okay? So a 12 to 1, a nice 12 to 1 move. First target would come off, so I'll be bagging 3%, and then the rest of it, so 75% of this would be, what, 75% of that is about 20, I don't know, 20, 25-ish? 24? 26? Something like that. A heck of a trade, a really, really, really good trade. All while I was sleeping, because at this stage I literally said to the guys on the Discord chat, you know what, that's it, I'm leaving my chart. If it takes me out, it takes me out. If it tags me in, happy days. But at this stage I was not tagged into the move. So let's look at what happened overnight. Okay, so I left the chart somewhere around here. Obviously I wasn't involved in the trade, it was like this. So what happened? I was asleep at this stage. Oh, the pain. Let's move it to the 15-minute and speed this up. Some heavy moves overnight. Okay, so I would have definitely taken profit within, what, a couple of hours by 6:45 in the morning, and price has worked its way down. It's shooting back up now. I don't know where price has gone. But yeah, that's today. That's the live market today. It still looks as though price is going to continue its way down. So yeah, a bit of a frustrating trade, but it just goes to show that you can get an entry, you know, as long as you place your order correctly with your broker, which I didn't with this one, and that could have been overall a 42% trade. You know, a couple of decent trades over here, 30% and 18%. There's a combined 50, and then the next day 42%. But yeah, maybe I was concentrating a little bit too much by updating Discord and just trying to explain to people why I was looking to take this trade. They could have jumped it, well, if they saw it at like 3 in the morning, they could have jumped in and joined the trade as well. But annoyingly, I put my my pending order in just the wrong place. It was literally a pipette out, and it cost me. So, but hopefully, especially for the gent who asked me, you know, why do you use higher time frame and lower time frame, so multi-time frame analysis? This is why. You know, it's just looking at order blocks on the 15-minute, on the 1 hour, on the 4 hour, as a confluence for a reason to get involved in the trend to continue. I set my targets on the higher time frame because if I was looking on like the 4 hour time frame, I would still be expecting price to go down and create a new low. So why would I set a target even lower? Set a lower target and take a partial profit. Absolutely. Keep growing that account. But overall, get involved or start looking at the higher time frames, and I will go through like a basic strategy, perhaps using the 4 hour or the daily, and I'll record all the results and I'll go through it, and I'll just speed up the video so you guys can basically backtest a simple strategy with me, and we can go from there. And then it's your job to drop down to, like, say the 15-minute or the 1 hour or maybe even the 5-minute if TradingView will allow you to go back further than that, and start marking up these trades as close as you can and see what result you get over the last maybe year, maybe 2 years. We can have a little competition with it, something like that. Let's make it fun. But yeah, the guys in the Discord server, they're learning this. They're learning how to do this correctly, which is superb. So the experiment, just for everyone to know, is I've got 6 people going through essentially like a trading academy that I've created. None of them are traders, but my plan is to make at least 2 of them professional traders by the end of the year. But I want to make all of them consistently profitable within 3 months, just by using the stuff which I know and the stuff which I've taught myself. Of course, I'm probably not as refined as a lot of the other companies out there, but it's an experiment, and hopefully I can give back to the guys who, in one shape or another, whether or not it's been personal or if it's been property or any other industry. Each of these 6 people have provided some goodness to me in the past sort of 12 to 24 months, so it's my chance to give back to them, really. But I'll keep you guys up to date with how that's all going, and I'm sure they will as well. But until then, keep putting those questions into the comments section, because that's really helpful. That's created this video here, and I've done it for that kind gent as well, who liked the video and commented. So this is for you, my friend, and hopefully it's helped make a little bit more sense. Obviously I don't want to give away the whole strategy, because that's for the guys in the Discord server at the moment, but pretty soon maybe I will just put it on YouTube. But yeah, thanks again, and I'll catch you all soon.